The company being analyzed today is Influx Healthtech Limited. This is a company in the pharmaceutical sector which is aiming to grow extremely fast. So today's aim is to analyze the company's financials, what it actually does, plus how fast is it targeting to grow. So let us start. So first we have the market cap of 528 CR. So it's a very small cap company. Price of one share 228 rupees. The book value, that is the assets minus liabilities per share. So book value per share 39 rupees. Return on capital employed 60.2%, which is very high. Return on equity is 45.4%, which is also very high. And the price to earnings ratio of 29.9, almost 30. Moving on to the financials, here we have the financials, all is in CR. So revenues grew from 76 CRs in fiscal year 2023 to 100 CR in fiscal year 2024, but only 205 CR 105 CRs in fiscal year 2025. So, fiscal year 2025 from revenue standpoint was a very slow growth year. However, if you take a look at EBITDA, EBITDA grew from 11 crores to 17 crores, but despite revenues only increasing from 100 to 105 CRs, EBITDA increased from 17 CR to 21 CR. So nice growth in EBITDA, more than 20% growth in EBITDA. Yeah, more than 20% growth in EBITDA. And PAT grew from 11 CR to 13 CR, so almost 20% growth in PAT. Gross profit margin increased from, is that 37%, 31% to 40% at the same time. EBITDA margin reached a high of 19.6% from 16.9% the previous fiscal year. And the profit after tax margin has also increased to 12.8%. So slow year fiscal year 2025, but it grew more profitable, good profit growth despite that. Return on equity has seen a bit of a fall, but still 37% is a really good return on equity. Asset turnover, total number of assets divided by revenue 5.6 times, which is all right. Now, very important, cash conversion cycle. You see, it's a negative. What does this mean? A negative cash conversion cycle simply means this is good for the company's cash flows. It's good for the company's cash flow. Okay, negative cash conversion cycle. It means it gets paid first by customers in the form of advances, then it has to pay its suppliers. So it gets cash first from customers, then it pays the suppliers, which is good thing for the cash flows. All right. So this is a good thing. Now then we have debtor days. Debtor days, it has supplied the product to the customer. How many days does it take for the customer to pay back the money? 113. The largest number, it's kind of worse for cash flows. So keep that in mind. Inventory days. How many days does it take for inventory to be converted into revenue? The larger this, the worse. So also keep that in mind. It is increasing. Inventory days is increasing. Payable days. After the company has gotten raw material supplies from its suppliers, how many days after that does the company actually pay the suppliers? This has also increased drastically, 248 days. This is good. This increasing is good for cash flows. This increasing bad, this increasing bad. But overall, all three rose a lot. So cash conversion cycle is still nice and negative. Yes, nice and negative. Then revenue concentration. We will cover what the company does. 48% of its revenue came from the top 10. Yes, top 10 clients. Top 10 clients. 36% of supplies came from the top 10 suppliers. Cash flow from operation, you can see this very minute, 7 CR, 9 CR, 7 CR, but at least it's positive. At least it's positive. Here's the capital expenditure in CR. Number of products. 35, 3,559 products it had in fiscal year 25. You can see number of products is increasing from 3,363 the last fiscal year. And debt to equity has reached a very low of 0.01. The lower this, the better. So it seems that debt to equity is not an issue. Now, what does the company actually do? All right, founded in 2000. Let me just zoom in a bit. Yes, founded in 2000, Influx Healthtech is a contract development and manufacturing organization, CDMO, specializing in nutraceuticals, cosmetics, pet care, and home care. Okay, sounds complex. Contract development and manufacturing organization. In a very simple way, very simplistic, oversimplified way, CDMO company is basically which does manufacturing of drugs on behalf of another company. For example, a company is doing research and it makes a new drug. CDMO, what will do, it will manufacture the drug on behalf of the company, handle the manufacturing. All right. So that's what it does. Now, operates a comprehensive business model. It provides end-to-end services, end-to-end, starting to end services, spanning product development. So helping in the product development, manufacturing the product, and regulatory support, enabling clients to focus on core areas like formulation, discovery, and commercialization. So clients, which are the pharma companies, they can now focus on core areas like the formulation, research, discovery, and commercialization, which is introducing them product into new markets. Okay. But it helps them with product development, manufacturing, and regulatory support. That is Influx. Influx Healthtech helps them. Now, 90% of its revenue comes from nutraceutical segment. We will discuss what that means. 5% cosmetics, 4% Ayurveda, and 1% veterinary and home care. All right, moving on. And we already covered the 3,500 products. Now, nutraceuticals is this thing, dietary and nutritional supplements, dietary plus nutritional supplements. So this is nutraceutical. Then we have Ayurvedic, and I think everything else can be explained very easily. Then you can see what is this? H1 fiscal year 26. So the first and the second quarter of fiscal year 26 combined makes the first half or H1 of fiscal year 26, where they already have made a revenue of 66.8 crores. All right, 66.8 crores in the first two quarters alone. Main thing, dietary and nutritional supplements. This is a nutraceutical segment. Let's move on. Next one, actively focused on expanding a product portfolio. So you can pause and read, but you can see different segments are being introduced. 2022, dry shampoos. 2023, wafer protein bars plus face mask manufacturing. 2024, they introduced Ayurvedic gummies, oral dissolving powder. They were making all of this. 2025, they introduced pet food for cats. And just reading them, you can see a lot of different segments, sectors are being covered, like pop chips, that's food, pet food for cats, dog food. We got face mask, that's a different segment. Dry shampoos, that's a different segment. Vegan protein bars. So different segments are being covered, which provides a large addressable market. Large market they can address. Number of clients has also seen an increase. 636 this fiscal year, previous fiscal year, fiscal 24, 559, 559. Marquee clients include Octavius, Dava India, Novus Life Science, Influx, and others. And others. Now, capacities, nutraceuticals, cosmetics, Ayurvedic, and pet supplements and home care. Now you can see the capacity expansion seems a bit low. That is because they recently added. So 10,000 was fiscal 25. They already added 5,000 to it. In cosmetics and Ayurvedic, added another 1,000 to it. So 50% increase in cosmetics and Ayurvedic capacity. And 1,500 fiscal year 2023 was the pet supplements and home care. 300 was added. What units of addition, units of capacity, we'll discuss that. But main thing is nutraceuticals, and they had a 50% addition, 50% increase in capacity. And and they're expecting to increase capacity by 2.5 times post utilization of IPO proceeds. So they're expecting to do even more capacity expansion, which will further increase growth, lead to growth. And that is one of the main catalysts for the growth. All right. Now, let's discuss the production capacities. All right. 480 kgs per day of tablet production, 24,000 bottles per shift of liquid production, 32,000 sachets or pouches. All right. Total investment 1.9 crores are needed. Tablet manufacturing 10 to 15,000 bottles per day, and capsule manufacturing 1.22 lakhs of capsules can be made. Then The Indian CDMO industry is expected to grow twice the global industry. So global is expected to grow by 7.2% CAGR till 2030 to 278 billion, while the Indian one is expected to grow by 13.8% CAGR from fiscal year 2026 or current year 2024's 22 billion to 55 billion in 2031. So it's expected to grow at a minimum very, very fast. While the nutraceutical segment is also expected to grow very fast by 10% CAGR to $76 billion in fiscal current year 2023. Finally, for future growth, this is statements from the management of the company. So their statements regarding future growth. As we look ahead, our focus is to double the business by fiscal year 2027. Compared to fiscal year 2025's 105 crores, they want to achieve around 210 crores of business by fiscal year 2027 with similar profit margins. Then, by fiscal year 2029, by fiscal year 2029, they want to reach 450 to 500 CR. So 105 in fiscal year 2025, 210 by fiscal year 2027, and 450 to 500 crores of annual revenue by fiscal year 2029, which is massive growth. They're aiming for massive growth, aided by a lot of capacity expansion. Yeah, they want keeping in mind using their IPO utilization, IPO funds, they'll be increasing capacity by 2.5x to 3 times, 2.5 times to 3 times by the first half of fiscal year 2027.